In a few minutes, I'm going to show you a simple support and resistance techniques that completely change how I read the market. Once you understand this, you will never look at support and resistance the same way again. My name is 11 and welcome to the Zone Trading. Without further ado, let's get right into it. So, first of all, let's talk about support and resistance. In trading and technical analysis, support and resistance are price levels where an asset, it can either be stock, crypto, forex, whichever one it is the level where they tend to pause or reverse because of buying and selling pressure. Let me take that again. It means support and resistance is a particular level where price tends to pause or reverse because buyers or sellers have a lot of pressure in that particular zone. So let's talk about support first. Support is a price level where buyers are strong enough to prevent the price from falling further. Think of it as a floor beneath the price. When the price approach support, traders are often expected you are expecting it to bounce upward. It's just like you standing on the floor. What is actually holding you is support, the floor. Then resistance. Resistance is a price level where selling pressure is strong enough to prevent the price from further rising. You think of resistance as a ceiling above you. So let's say there's a ceiling stopping you from moving to the next level. We'll call that resistance. Something is resisting you. Then support, something is supporting you below. That is what is called support and resistance. So for resistance, when price approaches resistance level, traders are expected to see a movement to the downside. You get? Why does this actually matter? That's one question we should ask ourselves. Why does support and resistance matter in trading? There are a few reasons I can actually list that make support and resistance matter. One of them is potential buying opportunities. You can actually get potential buying opportunities near support. Then you can find potential selling opportunity near resistance. With the aid of support and resistance, we can set stop loss and take profit level, and also identify possible breakouts. Now, what do we mean by breakout? When price moves strongly beyond these levels of support and resistance, we tend to get a breakout. A break above resistance often considered to be a bullish signal, while a break below support often considered to be a bearish signal. There's one common principle of support and resistance is old support can become new old resistance can become new support, and old support can become new resistance. So for that, let's get right into the chart. Let me give a little bit of example before we get into price chart. So as you can see on my screen now, we have this line here. We'll take this as price. This is the price movement. Let me use green for bullish and red for bearish. So we can clearly see that this market is going up, and if the market is going up, this is called a bullish move. So how do we identify support and resistance on a bullish move? The market moved from this level. It moved from point A to point B. Then it came down, it started pulling back down. The last point that this market got to before the breakout of the previous resistance high is the support. And the new most recent high of the market becomes the new resistance. This was a support level right here. that will draw out this box on. This was the resistance level. Then the market came down till this level. This is where the market paused and decided to start going up. This is now our support level, and this level right here that the market got to before it starts coming down is our resistance level. Now remember when I said there's a there's something about trading that says old resistance return support. This was our previous resistance level. The market has broken above, giving us a new resistance and came back into this level, and this is the level that it got to, which is this previous resistance, before it starts bouncing back up. Now our old resistance has now become new support. It's just a very simple concept. So you start plotting it, and so on and so on and so on until everything changes again. So for a bullish move, you want to see resistance, you want to see price violating resistance and holding support. So if the market gets to this new resistance and breaks above, we now have a new resistance. That does not mean this is not also our resistance level. If you want to draw out all of your support and resistance level, this is our resistance, which is the highest point before the market came back down, the highest point before the market pulled back, the highest point before the market pulled back. This is the most recent high now, so this is considered to be our resistance level. So if the market pulled back into this level again and stop here before moving back up, this will now be our support. So that is support and resistance on a bullish scale. So let's go to the bearish scenario. So for the bearish scenario, you see from this point the market started coming down. This is the last point that the market got to before it went up. So this is our support level. Remember, support is the floor, resistance is the ceiling. So anything below is support. This one is below, this is support. This is where the whole market started from before going up. It came back here, this is where the market started from before going up. Now old support has now become new resistance. So as long as the market just keep trending down, the lowest point of the market is considered to be our support level, and the highest point before the breakout is considered to be our resistance level. So on a chart like this, it is very easy to talk about support and resistance, but a lot of traders don't see it clearly when we actually go to the main chart. So let's go to the chart and start identifying support and resistance. So let's start with a bullish move. Let's not talk about I believe we already talked about market structure. So if you want to, this market, the structure of this market now is a bullish structure. So we are not talking about market structure today. We are here to we're talking about support and resistance. So I have a video on market structure. So if you do not understand the concept of market or how to identify or plot out market structure, go and watch our previous video on market structure. So getting right into it, let's identify the resistance level of this market. Since we are on a bullish trend, let's identify the support and resistance level on this trend, starting from the main move. That's somewhere around here. So this is the market. This is the whole move from this lowest point to this highest point. So if somebody is to tell you now that, somebody comes to me and say, 11, draw out the support and resistance on all this support and resistance I can find here. It's very easy. This is clear as day. First, we have a support here. We have a support here. There's another support here. Right here. Yeah. this one and this one, they are both in the same space. So for this one, this will be my support. And there's a reason I take this as my support and not, I did not identify this level as my support level. So probably on the next video we'll get right into that part, reasons why, how to actually draw out support and resistance level with market structure. I believe there's no other channel on YouTube I've searched. There's no other channel on YouTube that have actually talked about market structure plus support and resistance. How to identify and know the market structure and the support, the main support and resistance level to use, the ones that are important. So you, for resistance level, let's use the line. This was the resistance level. So the highest point, resistance, 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 and this was the last resistance. So if we should understand this properly, okay, let me just give you a little bit of expo on this video. You see, when the market moved from this zone, came all the way down here, then this was our first breakout. This is the resistance level. This is the highest point that the market got to before it started coming down. Then it paused here. This was the lowest point of the market before the market moved. You see, it tried to break above from this level. It tried to break above from this previous resistance level, but there was not enough buy momentum on this move to break above. So that's the reason I did not consider here to be my resistance level. This is still my resistance level. You see, when the market was coming from this support level, it came to this resistance level but rejected it, came back down, then finally broke above it here. This is now our new resistance level. Then from this level, the market dropped down all the way to this point. From this is where the market got a pause from and decided to break above this new resistance level. This is now my new support level and this is my resistance level. Why is this my resistance level and this my support level? Because this is the lowest point of the market before we actually had a new breakout. So this is my support level and this is my resistance level. When the market got to this resistance level, it paused and then it pulled back into this point. Are you seeing? When I was drawing my support and resistance level, this is the reason I was picking out all of these support levels. So I'm trying to explain it now so you guys will understand. So this is now my new support level right here. This is the level that actually caused this whole breakout. You see, when the market pushed all the way up here, it tried to break above this resistance level, but it could not. Instead, it pulled back down and then moved. So we are not using this as our support level because this one does not matter. What matter, the zone that actually mattered on this move is the beginning of the move, not the other one or the minor level within the major move. So the market started from here, pushed all the way up. This is now my new resistance level. From this level, the market dropped down to this level. This is the pause that caused the support level. So this is my new support level. It pulled back, broke out of the new resistance level. This is now my new resistance level. It pulled back down. This is the support. From here, the market moved again, broke out from this level. By breaking this previous resistance level, we got a new resistance level. Then the market pulled back at least into this level. So that's why I said we'll use this one and this level as the same. So eventually the market pulled back to this level. I think we would not identify this one. We have a support level, a valid support level here. Why is this considered to be a valid support level? Because when the market got to this point, it broke out from here. This is now my new resistance level. It pulled back into this level. This was the last point that the market got a pause from before this breakout. So this is where some traders find it difficult. You see, this was our previous resistance level. The market broke out from here. After breaking out, the market came back down here. This was the lowest point before the market moved back to this resistance level. But when the market got to this resistance level, what did it do? It tried breaking out. It broke out, but then it failed to break and close above this resistance level. So this is not a valid resistance level. A resistance level, a new resistance level is only valid if we get a break and close of the candle. Take note, a breakout is not valid unless there is a break and close of the particular time frame you are. If it is the daily time frame you are looking at to draw your support and resistance from, if the market is not breaking above and closing above resistance, then this is not considered to be a new resistance. This is just a failed breakout. Then you see, when the market failed to break out, it came back down, even broke below this level. A lot of traders will say this is a change of structure. Like I said, I already made a video on market structure. So if you do not understand how to use or identify market structure, check our previous video. So the market came down back from this resistance level. It came back down here. From this resistance level, it came back down here. This was the lowest point of the market before an actual breakout here. This is where we got a breakout. This was the highest level. This is a close above. So the market came back, retested from this level. From this level, it pulled back. This is the lowest level before we got a new high. Then it came back down again. You see, it tried to break above this level. It could not. Then it's dropped it down. So this is the current situation of this pair. I'm doing this video in real time, so you guys will understand that this is actually how I trade. So basically, this is a very simple way to identify support and resistance in an uptrend. The lowest point of the market, the highest point of the market. Highest point on a bullish movement is resistance. Lowest point, support. Highest point, resistance. Lowest point. So when drawing it, if you see a market structure that is going up like this, all you just need to do is identify the high, check for the breakout, the candle that broke out. The highest point is the resistance. Then on the pullback, the lowest point is the support. Then from the lowest point, how the market moved, broke out from the previous one. The highest point is now our new resistance. Then the lowest point will be our support. Just keep on doing it and so on. Practice. If you can watch this video multiple times in order to understand, because I believe you can't just grasp all of this knowledge all at once. You need to watch over and over and again and practice on the market to be able to understand this concept properly. So this is for a bullish move. Let's go into the bearish scenario. So for the bearish scenario, this is the lowest point. When the market broke out from this level, the lowest point is considered to be the support level and the highest point resistance level. From the resistance level, you see the market dropped all the way down here. This one, we tried breaking below here, but we could not. The market could not break below this level. This was where we got a breakout from. So immediately we got this breakout, we already know that okay, if this is where the market will reverse from, this will now be our new support level. Then the highest point that the market got to before breaking below again is our resistance level. So resistance, we got to break below here, support, the pullback phase. The highest point of the pullback is the resistance. Then from this level, the market just dropped and broke below the previous support level, giving us a new support level, pull back into the highest point, resistance. Then the market pushed down again, broke below this level. We got our new support level. The pullback phase, the highest point that the market got to is our resistance level. Then from the resistance level, we got another breakout. Break having giving us a new support level. Then the highest point that the market got to our resistance level. Then from this resistance level, the market pushed down, breaking this previous support level, giving us a new support level. This is now a new support. Then the market pulled back. This is the highest point that the market pulled back to. Like I said, the market pulled back into this zone. This was supposed to be our resistance level, but because this zone level right here does not have enough momentum to cause a new break below, then it is not valid. Then after the market rejected this support level, it pulled back into this level. From this level, this is where we got a breakout from. So that is why this is now our resistance level and this our new support level. Then another thing I want you guys to actually pay attention to is how to really draw a resistance level and how to really draw a support level. I think this video is already getting too long, so let's conclude it with this. Support and resistance are not just lines. They are not just line. Unless you've been trading for a while and you've mastered your concept, that is the only way you start using line as support and resistance. If I want to draw support and resistance, instead of just putting a line on this zone right here, this way you will not even know where you are actually waiting for the market to get to before you start looking for buy or sell. You don't draw support and resistance with line. You use a zone. So a support and resistance level is a zone, not just a line. So if this is my resistance level now, this was the highest point of the market. I'm talking about this level right here. This is a quick expo. If this is the highest point of the market, how do I just take this line and just put it, this horizontal line, and just put it here? No, I will take out this my box. I will plot it from the highest point where the market go to. You see the main candle from the highest wick to the body. This is where I will plot out my zone, then extend it into the future. You see, when the market came into this zone, if you are use your line here, maybe put it here. Some people want to put their zone here. This is very, very wrong. This is very wrong. Let's say, for example, you're using it like this. You got a breakout here. This is a retest. You are waiting for the market to actually take a buy around here, and your stop loss was around here, and you are hoping to buy this market to the next zone. You see how you would have gotten stop out. But if you use the zone, this was a breakout, this was a retest, and then maybe after getting this bullish candle, then you use the lowest point as your stop loss, then take profit. You see, this would have actually been a profitable trade rather than the line rather than using the line to identify support and resistance. So if we now have a new resistance, this is where we got the breakout. So this was the highest point. If we now have a new breakout, all I want to do is I want to repeat the same process by bringing out my box, putting it on from the highest point to where the body is, then extend it into the future. Next one, if I get, this is the highest point here and this is the body, extend it into the future. If this is the breakout, the highest point of the candle and the body, the highest wick and the body, the highest wick and the body. This way, when you will actually get a breakout, you will know that yes, the market is breaking out from the whole zone, from the whole of, you see, when we got a breakout, retest, if you are taking a buy here, profitable. So this is zones, not just line. You don't draw support and resistance level using line. You draw it as a zone, and this is how you identify support and resistance level in the market. Remember, the goal is not just to draw a perfect line. The zone is to identify the area where price is most likely to react. So if you found value in this video, make sure you leave a like, subscribe to the channel and turn post notifications so you don't miss our future trading content. Thank you for watching. Once again, I'm Levin and this is the Trading Zone, and I'll see you on the next one. Peace.